Shares of EV maker startup Canoo surged 35% in July after the California-based firm announced it was expanding its partnership with the U.S. Department of Defense's Innovation Unit. The firm aims to help standardize modular lithium battery systems for the military. Canoo also delivered 3 new crew transportation vehicles to NASA the following day. Now, to start off the month of August, it gapped higher, only to see its price give up all those gains from July. And today they just announced earnings. Let's get into the earnings report before we continue with the chart analysis. This article is coming from Yahoo Finance by way of Reuters. EV maker Canoo posts smaller than expected loss on lower costs. So EV maker Canoo posted a smaller than expected quarterly loss on Monday on lower research and development costs. The company also unveiled its new lifestyle delivery vehicle 190 that has increased payload, load capacity, and body length compared to the original lifestyle delivery vehicle 130. Canoo's loss narrowed to $71 million in the second quarter from $164 million a year earlier. On an adjusted basis, the company lost 14 cents per share compared to estimates of a loss of 19 cents per share. Having gone public with the hopes of shaking up the automobile industry, EV startups have seen their market valuation evaporate in the past few months as demand slows and funding dries up in an uncertain economy. For example, we just got news that Tesla just decreased the cost of their vehicles once again. This must mark roughly the 6th or 7th time, depending on the model, that they have cut prices on. Canoo reiterated on Monday that it had substantial doubts about its ability to continue operations for 12 months. This is a big issue. It reported cash and cash equivalents of $5 million as of June 30th, compared with $37 million at the end of December. Wow, that's a big cash dump. The company expects capital expenditures of $70 million to $100 million in the second half of 2023. Now, part of that expenditure is coming from finalizing incentive packages with Oklahoma Cherokee Nation. EV startup Canoo said on Monday it's finalizing incentive agreements with the state of Oklahoma and the North American tribe Cherokee Nation for an estimated value of $113 million over 10 years. As part of the agreements, Canoo said it has already started hiring for its vehicle assembly facility in Oklahoma City and the battery manufacturer factory in Pryor. So that's where some of their expenses are going for the second half of the year. Now let's get into the charts. And we're going to start off with the weekly chart. And you can see we had a daily sellers level at the 90-cent level, and price almost came to the zone before pulling back. Now, depending on how you drew the zone, price either hit that zone or not. You can see in the weekly chart we have a wick over wick. So if I was to draw my zone from the bottom of the wick to the top of the wick, well, price would have hit the zone. But I drew my zone based on the daily level. So let's go down to the daily chart. So you can see we had a drop in price, we had some basing candles, and then a drop. So this was a leg in, basing candles, and then a leg out. What you can also see is that the 200-day moving average sits at about 85 cents. So this is a secular dynamic resistance line. Anytime price moves up, it's going to have a difficult time getting past this barrier. Now, Canoo's low sits at 41 cents. And the fact that they're running out of cash means that they're going to have to go to the public markets to raise funds, which means that they're going to issue more shares, which means that any revenue that they have in the future is going to be diluted. Now, speaking of revenue, yes, they beat estimates, smaller loss than expected, but they're not making any money. Anywhere from the first quarter of 2022 to the most recent quarter, they're losing anywhere from 90 to 180 million dollars a quarter. So unfortunately, although Canoo has some good things going for themselves, the automobile industry is very tough. You need a lot of capital. It's very capital intensive. Question is, will Canoo make all-time lows in the coming weeks and months? The probability is likely. They need more cash. And the only way they're going to get that cash is to go to the public markets, which means that current Canoo bag holders are not going to be happy, because if they make any revenue in the future, it's just going to be diluted. With that said, look for Canoo to at least retest the all-time lows at 41 cents, which is only roughly 20% lower in the coming weeks, but definitely prior to the next earnings on November 13th. Thanks for watching. Subscribe. Please like the video.